Hello, this is John Pugliano, and I want to respond to some questions I've received, and these are some really good questions about why am I still invested in oil stocks when I think we might be headed into a recession. So I want to answer this actually while I'm at the gas pump getting some gas. It maybe puts a little emphasis on the answer to the question. There are several reasons here, and hopefully I'll remember them all. By the way, I don't know if you can see him, but my puppy's in the back of the car right now, so he may pop up here for a cameo appearance as well. In any case, so why am I still invested in oil stocks? It is true that if we go into a typical recession, that oil stocks are likely to get really hammered, and we've seen them pull back quite a bit this year, although, you know, over the last 18-24 months, they're still performing extremely well. What I think is different this time, and this is always a bad phrase to use, but you have to remember that recessions are not all the same, okay? History doesn't repeat itself, but it does rhyme. So there are certain characteristics of any recession, but they're not always the same in every recession. The other thing to remember too here is that I'm not predicting, economic catastrophe, end of the world depression, or, deep recession. I think that there's still a lot of money, and overall the U.S. economy, for a number of reasons, is still very well prepared for future growth. Go back and look at a video I did about a year ago where I talked about global choke points, and the advantage that the U.S. has over much of the world is that the things that are choking global growth are actually beneficial to the U.S. One of those happens to be oil. I'm getting ahead of myself. So let me jump back. Why am I still invested in oil stocks if they're likely to go down like happens in any recession? Well, number one, oil is inelastic in terms of its price. Now, it does go down in a recession, but there's a limit to how much it can go down because we all need oil, okay? Which is, again, why I'm sitting at a gas pump right now. I have to buy oil, have to buy gasoline to fill up my car. Everybody else does too. So there is clearly a demand for gasoline and diesel and jet fuel and all the other, heating oils, natural gas, all these other things that are components of the energy sector. The reason they dip so much in a recession is primarily because of things like business travel and, airline travel really cuts off during a typical recession. We may not see that as strongly during this recession because things like global international travel have never gotten back to where they were pre-pandemic. Okay, so we're still low there anyways. So I think there's still a great deal of demand, and that should help support the normal inelasticity of the price of oil. The other reason along the demand side is that Europe really dodged a bullet this year with having a warmer than expected winter, or warmer than normal winter. Okay, had they had a really deep freeze this winter, they would have used a lot more of their natural gas and other types of fossil fuels to heat their homes, and that would have really raised the overall price of oil. That didn't happen this year, but it doesn't mean it won't happen as we go into next year. So right now, even though there's a lot of oil and natural gas, supplies building up in reserves, that doesn't mean it's going to be there forever. And again, particularly maybe not in the second half of this year. Along those lines with demand, and these are all fundamental reasons why I still am holding my oil stocks, and that's that, with all the emphasis on ESG over the last 10 years or so, there's been a huge underinvestment in oil. And so the supply of oil is not keeping up with the overall global demand and projected demand. So again, there's reserves building now because Europe didn't end up using as much as some people thought they would. But I don't think that lasts forever. All that underinvestment over the last 10 years means that oil stocks, companies like ExxonMobil and Chevron, they have extremely favorable valuations. Okay, if you look at a company that's more defensive, consumer products driven like Procter & Gamble, or you look at a sector like the utility sector, which again is considered more consumer defensive, it's a consumer staple, people flock into those kinds of stocks during a recession. Well, their valuations are sky high right now. And again, you compare that to the average oil company, they have much lower valuations, and really not only much lower, but extremely, extremely favorable valuations, given the fact that the likelihood of these companies, going bankrupt or out of business in the next few years is extremely, extremely unlikely. So because of the long-term impact of supply and demand, I really like these valuations. Another thing to consider, and this is more than I can get into in this video, but think of the US dollar acting differently now as opposed to it had been in previous decades in terms of its relationship to oil. Now, normally being since the 1970s, the US was a major importer of oil. So as dollars left this country to buy Middle Eastern oil or oil from Venezuela or Canada or any other place, that hurt the US dollar. Well, things have changed, and now the US is not only a major producer of oil, but also increasingly a huge exporter of not only oil, but now natural gas because of the situation in Europe. So unlike past decades when oil demand and oil supplies and interruptions could hurt the US dollar, now the US dollar and the price of oil can actually go up together. Okay, kind of hard to understand just in this simple conversation. I won't get into it all, but it's very favorable for the US dollar. Again, this is one of those choke points that I talked about that could impinge global growth, but still have favorable outcomes for the US economy and for North America broadly. I won't even get into why I don't care about the nonsense you hear about petrodollars. I did a lengthy full audio, well-studying podcast about that, I don't know, a year or so ago. Go back and listen to that. But I am not at all concerned about the myth of the petrodollar. I'm forgetting some of my reasons here because I'm digressing. Geopolitical risk. This is another huge thing that, again, is different in this potential recession that we're headed to, and that's that the geopolitical risk has never been higher in modern history. In modern history, I'm saying since about, at least the terrorist attacks of 2001, which were more than 20 years ago, and really from, that was a direct attack on U.S. soil, so that was very unusual. But in terms of geopolitical risk and their impact on places like Europe, we have not seen anything like we're in really since World War II. And from a Cold War aspect, we haven't seen anything, like this in more than 40 years, because you got to go back to the 80s to see something like we're seeing with the shift in geopolitics because of a potential Cold War II emerging. And so that geopolitical risk is favorable to the price of oil and therefore to oil producers like, U.S. oil stocks. So, just think about last week, the military issues that came up with Syria and U.S. Doing retaliatory attacks into Iran. The Middle East is still a hotbed of possible problems. Obviously, Ukraine, Russia, it's been going on for well over a year now. We're getting into warmer weather where both sides are talking about increased offensive actions. Things are probably going to get worse there before they get better. Again, that's all favorable for oil prices. And I'm not wishing this, or I don't desire it to happen. I'm just, again, very cynically looking at the world. And, if there is a major problem in the Middle East, or problem with Ukraine, or an additional expansion of the Cold War that's emerging with China, those things can all be favorable to the price of oil, especially if we get destruction of critical infrastructure like we saw last September with the sabotage of the Nord Stream pipeline. So you factor all those things together. I'm not saying that oil prices aren't going to go lower, but I am saying that for now, for me and my money, I'm holding on to my oil stocks.